All right, guten Morgen. How are you? Come allez-vous? Jumbo? Yeah, Johnny called it. Sure. Johnny called it. Well, it was one of the two possibilities, right? So, good call. I was going to take the shot anyways, took the shot. Got to pay the penalty. Wow, there's no penalty. I missed. Whatever. Anyways, we'll get to that in all good time. First of all, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Hey, welcome to Forex.Today, the YouTube community. Is my camera off? I guess my camera's off. The YouTube community of almost 20,000 foreign exchange traders. Thank you for being a subscriber. Thank you for all of the positive energy that you provide the community every single day. And of course, the hard work that you exhibit. I appreciate you. If you appreciate me, I don't know. Click the like button. That's all. Tell YouTube this is quality content. It'd be great if more people knew about what we do because I think we make the world a better place. While you're at it, would you please visit tradersway.com as well? Open up a demo account. Pretty simple. Take you 30 seconds. I like the variable spread account. You might like an ECN because you're like, I hate spreads. Okay, do what you got to do. So, or you could have a fixed spread. VAR, fix, or ECN. Okay. Then you start placing trades. And you're like, hey, Wayne, the execution speed's fast. I know, right? Hey, the fees are small. I know, right? And the income produced from swaps is way better, way bigger than a normal or average or my last broker. And I'm like, I know, right? Cool. But ultimately, you're going to need trust. That's what you need. They earned my loyalty and respect a long time ago during the Swiss National Bank explosion, where many brokers went, or a couple of major brokers went out of business because they were trading against their clients. Well, Trader's Way, not negatively impacted at all. So I'm like, wow, that's what I want to see. So anyways, that's how they earn my loyalty and respect. But if you don't give them a chance, how could they do it, right? For you. So the best way to do is start the relationship, tradersway.com, open up a demo. Check it out. Let's go. Okay. All right, cool. Yeah. Okay, one of the things we were talking about, we'll get there, but let me draw it before you look at it because I want you to not, if I show you too much information, you're going to get sidetracked. Okay, let's do it this way. Clear Z. Maybe I can switch over to a different chart first. Let's just randomly pick one, Kiwi dollar. And then switch this to blankety blank. All right. So imagine you have a top. We'll call this a top, a pivot profit zone. Okay. But you expect to be here in the future. Okay. And what we have is a situation like this. Okay. Remember, expectations are that we will be here in the future. Okay. You have a top. The market responded to the top. That's for sure. There was some profit taking. Great. There's really two things that could happen here. Now, you're going to be pulled based on your expectations. You're going to be pulled this way, or at least I was pulled this way. Okay, basically, right? That's what I'm thinking. At the same time, I also know that something like this can occur, right? And so in the day trading group last night, we were playing this out. Okay, even in that case, we're expecting this to be a buy zone in the future, and we're still going to work our way up. So the conversation, I said that this I expected to be bullish, but this is the actual trade. I don't buy a bottom. I buy either a double bottom or a higher low. Okay, cool. So that's what occurred yesterday. And then Johnny's like, hey, man, whoa. Hey, aren't you worried about the top? I'm like, yeah, I totally see it. You're totally right. Absolutely perfect observation. I said, but I don't know what's going to happen. I think it's going to go up, but I understand it totally can come down. And if it comes down, it's technically significant, and I will have to adjust. But at this point down in here, I got the technical setup, and that might go up based on my fundamental analysis. It might go up. It can go up. It has gone up in the past, but it doesn't have to. And we have a real risk between the lower high, which I actually outlined a couple of days ago, and sort of a double top area. This is where the risk lives. Okay. So I'm like, well, here, at least I'll either have my stop, which is not too far away, or by the time we get there, I'll be able to move my stop closer, maybe even break even. And so therefore, if it does break through, I'm going to get paid. And if it collapses back, I either take a small loss or I break even. But I got a free look. Okay. So I was in a couple of trades here, a few trades actually. One of them, which was Aussie, I moved my stop a little bit closer, so I had half the risk, and the other ones were losers. Because what ended up happening was what Johnny was concerned about. It went up and then, cool. Too bad, so sad. Okay. Cool. Too bad, so sad. Too bad, so sad. So that was sort of the overnight discussion. So now for you to ponder, and there's no real answer here, Johnny was concerned about it stayed out. I was less concerned, but realistically, I saw it. It's not like I said, no, Johnny, you're wrong. I'm like, no, I see it. I want to take a shot. And if I miss, there's no negative critique. So in this case, I lost 33. But here's the thing. If it had worked out, I would have been up 133. Or let's say 100. Okay? So I want you to even think about that, Johnny, right? Don't look at every trade, win or loser, as binary, good, bad. Winners are good and losers are bad. So if it had worked out, I'd probably be up 100 pips. So was it worth the shot? I lost 33, but I would have made 100. So I could take that shot and lose 3 times and, versus what the potential is. And of course, here's the other thought process. I would have gone for more than 100. I think the target was 300, which is funny because my standard target's 333. But so I risked 33 on these trades going for 333, but at least 100 would have been likely. So I don't know, just, again, not good, bad, winner, good, loser, bad, and all that kind of stuff. Was it more like, what was the probability? And of course, your analysis can come to a different conclusion. And again, yours isn't wrong or right, and mine isn't wrong or right. It's a judgment. You know what I mean? It's a judgment. So as long as you look at it and you saw there was a 70% chance of it coming down. I might have looked at it more like 40% chance, but if it's only a 40% chance, but if I get it right, I'm going to make 3 pips for every pip I risk, then I'm like, well, shoot, right? I might make money on this. And if I make money, I'll make 3 times more money, actually probably significantly more than that. So, whatever. So it's just, it was a good conversation at exactly the right moment. Okay. But you'll see guys being sort of Sometimes I tell you to be binary in your decision-making process. But with risk management or even sort of personal management expectations, maybe trader psychology, sometimes, those types of things are less binary, right? Winners are not necessarily good. I've explained many times how you could be on a trade making money, but it was a dumb trade. You're making money, but it was dumb, and don't worry about it. You'll give it back some other day, right? And then other situations, you take a loss and you're like, you know what? That's how you do it. That is a great loss. Okay? De Beer says, yeah, it makes a huge difference to know that, to your psychology, knowing where the risk is and having the confidence to take the trade. Yeah. And so that was the situation. I knew the risk was there. But like, imagine Michael Jordan or some other, famous basketball player saying, Coach, don't pass me the ball. They're double teaming me. Well, first of all, they're double teaming you. So someone else is open. But, they're double teaming you because you got the skills or whatever. I don't know if that's a great analogy, but I saw the risk and I took the shot. That's all. Do you think I was disappointed this morning, though? Okay. Yeah. I was like, shoot. Okay. Yeah. Good morning, Alejandro. Bum 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 bum. Okay, what do I want to do? Pound down, Aussie down, Euro up, which is funny. Kiwi sort of neutral-ish. Cat, I don't really want to do anything. Maybe dollar pairs. Dollar pairs sucked yesterday, so there wasn't any opportunities, and now maybe they're warming up. All right, fine. We have a Fed meeting coming up. How many days away is that? I'm wondering if it's too early for that. Okay. Euro has been a dog with fleas, and now it's one of the better opportunities. Doesn't mean I want to buy it. If I wanted to buy it, there's a couple of things. You might say, well, Wayne likes the step up. I do. And then you're like, Wayne likes the pullback. Yeah, I do, but I like higher highs even better. So if it rolled over here, I could. Not that I should, but I could. And then I would. Probably not today. Okay. Cool. So not ready yet. Yeah. Aussie was really strong, and then it weren't. Hourly, we just crashed through the moving averages. Okay, up, down, up, down, up, down. We're still maintaining. Okay, that's good. I don't like up and 100% down. That typically leads to something like this. Okay. But right now I'm watching the Stairway to Heaven. Okay. Kitty cat, I wanted this down. Boo. All right. So anyways. So I look at that. I want to sell it. And it don't look right to me. Okay. But if you're a bull, you're going to do something like that. Hua. Notice that this was the M3 sell, M3 sell, M3 sell, M3 sell, M3 sell. Holy schnecker schnocker. R1. So there's only one. Well, there's two more possibilities. If R1 holds and this does drop, okay, we're looking at 123. Okay, and we call that an inside week. And whatever. I might, right? Whatever. Makes sense, actually. Now, if you recall, we had this going up to like 125. So there could be another 100 pips worth of up before the down. Okay? 100 pips up before the down. Okay? Could be. How about the piggy, piggy, piggy? Whoa, what are you doing down there? Once again, technically that's very important. Check this out. Top to top. Top break. So that sets this up. Is Canada going to raise interest rates in a few hours? No, but they're going to taper. Did you guys see McDonald's reported this morning? One of the things in their analyst call is sales in China are significantly down. That's interesting, huh? So if you look at the Big Mac index, which is a measure of a ubiquitous commodity, you can look at prices, but in this case, I'm using it as just a macro gauge because a Big Mac can be purchased in every country except North Korea and probably Venezuela. So you can say, well, if it's available pretty much in every country on the planet, we can look at that as demand. And you can say, why is demand for a Big Mac less in Zimbabwe than Uganda? You could say, well, it could be the value of the currency because that means it's more expensive to a country. Okay. Now, the interesting thing is the reason you use a Big Mac index is that you can say the Big Mac itself is a Big Mac. No matter where you go, it's going to be priced at a reasonable price for the locals to buy. So you can judge in dollar terms how much it costs. So like in China, let's say in dollar terms, a Big Mac is $1. But in Switzerland, the same Big Mac in terms of dollars is $8. Okay? And they're equal. Okay? And you can say the Chinese currency is 8 times weaker than the Swiss currency, right? So your customer says, does anyone in China actually go to McDonald's? Nobody in America goes to McDonald's. That's not the point. The point is there. I'll make up a number. There, I don't know how many stores. There's 10,000 stores in China, and last year they sold $1 billion worth of food. This year, the same 10,000 stores sold $950 million in food. And you're like, oh, that's a change. And it's a negative change. And that can't be good. Or what if it was 850 million? Or what if it was 750 million? You're like, oh my God, at 25%. But I think it was something like 10% or 9% less. So you're like, it's a statistic that's relevant because if your sample size is less than 30 stores, okay, then you're like, it's not statistically relevant. But if you're measuring demand from 10,000 stores and there's a significant change, a significant negative change, you could extrapolate and say, well, it's either a change in taste, because do you guys remember the factors of production? There's or factors of demand. I think there's like 8 factors of demand or whatever. In this case, you could say, well, tastes have changed, or news has come out that says if you eat a Big Mac, it makes your penis smaller or something. And all of a sudden you're like, oh, I don't want to eat there, right? Right? One social influencer says, never eat at McDonald's, and then people don't eat there anymore, right? So there's a lot of things that change, but all things being equal, if there hasn't been a radical change in that way, then you could say, well, maybe it's the economy. Maybe people have less money. They feel less comfortable. A change in the household wealth effect is what it comes down to. And that negatively impacts demand. So it's a way of looking at things. It doesn't explain why, but you could say, maybe it's COVID. Maybe COVID's bad in China. Maybe COVID's worse than what the government's reporting. I don't know. I'm not making a subjective analysis. You could think whatever you want to think, but it's really interesting to have McDonald's report a significant decline in sales. Right. Now, Russell says Venezuela has McDonald's, but it's unaffordable and all that kind of stuff. Yeah. And you would say, well, maybe it's the economy. Maybe it's the currency. Maybe it's... So, like, this is probably an old story, but I know at least a couple of years ago, the story was that there's 2 places on Earth you can't buy a Coca-Cola. Or let's say Coca-Cola isn't made or whatever, right? There's no Coke. And that's North Korea and Venezuela. Now, Venezuela used to have Coca-Cola, right? But the problem is the cost of making it in terms of dollars now, Coca-Cola in Venezuela would be like $500 for a can of Coke if you had to pay for the sugar and the water and the can and keep the electricity on at the factory. And of course, nobody in their right mind would pay $500 for a can of Coke in terms of how much money they make and the purchasing power of the money. So you're like, $500 for a Coke? This used to be 50 cents. What do you mean $500? That's like 10,000 million times increase. So what Coca-Cola did is just said, all right, shut this shit down. We're leaving. Let's go to Chile. Right. Okay. So Russell, it reminds me of like when Eastern Europe opened up. A friend of mine was living in Eastern Europe making American dollars back when a dollar in Eastern Europe was a lot of money. And he was living, I think, Prague at the time. And it might have been Hungary, though, where he was visiting Hungary, which was, Budapest was doing great at the time as well. And they had just opened their first McDonald's. So a bunch of his friends said, hey, let's go stand in line. Now, McDonald's was very expensive for the locals. So you had to be a diehard McDonald's fan. And he's like, well, whatever, I'm American, right? So anyways, they get in line and turns out they're about 10th in line or 5th in line or whatever. And the first people go in, but they've never eaten at McDonald's and they don't have much money. So the first person orders like a Coke. The second person orders fries, right? And like, because in their money, it was a lot of money. Okay. So finally he gets up there, this big American that's eaten at McDonald's probably once a week for his entire life, goes up there, and he was the first person in Hungary to order a Big Mac. He's like, I'll have a Big Mac, fries, and a Coke. And they're like, you're kidding me. Do you know how much money that is? Yeah, it's $3. Boom, $3. I'm American, right? Anyway, so he got the first Big Mac in Hungary. You're not an American. You're like, oh no. Oh no. So it just shows you the difference in currencies and stuff like that, right? Thank you, Highlander. Thank you, Highlander. But actually we bring that up a lot. We in economics, it's actually used a lot, maybe not in textbooks, but this idea, like, you have to think of an example of, even if reality doesn't change, demand could be destroyed, right? So you have to look at factors of demand, one of which is taste, one is alternatives, and all this kind of stuff. And so the idea, like, if you think rhino horns will make you more virile in bed as a man. Okay, puts the yin in your yang. Then you buy rhino horn stuff. Now, you can have all the science in the world to say, that's stupid. What are you talking about? You can't take rhino horn and have a more effective penis. I mean, dude, are you nuts? Here's all the science. Guess what? People still buy it anyways. Okay? So China tried to do that, educate. So I think it was China, there was a lot of demand for rhino horn because it puts the yin in your yang. Well, all the rhinos are being slaughtered. Okay? So it's a rhino genocide in Africa. So you got to protect the rhinos. So people complain to China, and then China tries to educate, hand out flyers. Killing rhinos is bad. Oh, don't put rhino horn, don't buy rhino horn because it's not going to make you better in bed sexually. Doesn't work. So then a nonprofit group realizes, oh, they can tranquilize a rhino, drill a small hole into the horn, and put poison in the horn. It won't impact the rhino. And then they send out the literature that they've done this, and that there's a small chance, if you ingest this poison because you bought illegally rhino horn powder or whatever, you might go impotent. And that actually changed demand. I don't know if it's the full story. So if you know lots about rhinos, don't. What I'm saying is the science doesn't actually have to make sense. It's the change in taste, like, right? This just like, oh, well, what if you buy rhino and it makes you impotent? Well, that's even worse. So now I don't want it, right? So anyways, that's all it is. But there's some sort of it comes up a few times when you're learning the factors of demand, right? That kind of stuff. I don't know. And there's 8, isn't there? Let's factors of demand economics. Can you imagine going back to college when you're 40 and you're like, let's memorize the factors of demand. price of the product, the consumer's income, the price of related good, the tastes and preferences of consumers, consumers' expectation probably for income or wealth, and the number of consumers in the market. And you're like, you have to memorize all this kind of stuff, right? And then you get a stupid question on your exam and you're like, wait, that's one, he's asking about one of the factors of production. You're like, oh, well, that's the price of related goods. You know what that is? You want to buy a Big Mac, but then Burger King says the cost of a Whopper is going to be cut by 75% in the month of October. What happens? The price, the sales per unit, the unit sales of Whoppers goes up, but the unit sales of Big Macs goes down. Had nothing to do with McDonald's. Price of related goods, for example. So it shifts your behavior. Okay. So one of the things we're talking about is consumers for income. That's probably what that says, or wealth or something. So if you think you don't have any money, then you're going to behave like you have no money. So you're not going to buy a Big Mac. Now, what with China, again, I'm not giving you a subjective analysis. All I know is McDonald's reported a decline. Maybe it's McDonald's. Maybe people don't like Big Macs, or they, maybe there's a sale on Whoppers in China, or maybe more people had COVID, or more people were afraid of getting COVID from being in public. Okay? But remember, that was based on previous stats, so things should be getting better. But what McDonald's is reporting based on period over period, things did not get better. Okay? Delbeer says, yeah, your taste buds come alive when you eat good food. Yeah. I love good food. Okay. McDonald's, I would not call good food. Okay. What is all this to talk about hyperinflation? They don't understand. So I guess you could sympathize, right? A little sympathy for the devil. They don't understand. So if somebody uses the word hyperinflation, they're mistaken. What they're concerned about is high inflation, sticky inflation. Okay, that's great. That would be a valid concern. They're concerned about two things: inflation going up, okay, and inflation persisting. So we'll call that long term. Things like rent and wages, for example. So rents are going up, wages are going up, and these things don't tend to go down. I think it's pretty rare for your landlord to give you a call and say, you know what, we've decided to lower your rent. Just doesn't happen, right? And what happens if someone lowers your wage at work? You quit, okay? So these things are actually, the economic term, are sticky. So those things are going up, and they will stay. They will stay. They will stay elevated. But other things like commodity prices will come down, right? Great. So the question is what of all the inflation, how much of it is sticky? And we know it's going up, but how long, which ones will stay? And then when will this inflation that's transitory come back down? Now, once again, if you listen to companies, McDonald's reported, Coca-Cola reported, and I think one other company I was listening to. By the way, do you notice I do my research constantly? Just sort of heads up. So McDonald's, Coca-Cola, and someone else reported, and I forget who, but that this transitory inflation is likely to persist all the way to 2023. The government right now says, like if you listen to Janet Yellen, who spoke recently, like 2 days ago, when she was asked how long will inflation persist, she says until the second half. Okay, the second half, I guess I'll do it this way. The second half of 2022. But if you listen to Coca-Cola and Mickey D, for example, they say, no. It's going to be out till 2023, 6 months or more beyond what the government says. So who do you think is more right? Janet Yellen and her quants, or these businesses that make billions and billions of dollars per month managing supply chains globally and have massive exposure to wages, rents, and commodity fluctuations? Which ones are going to be more accurate? Which ones are actually talking to the inflators? They're talking to the farmers. They're talking to the franchisees. They're talking to the bottlers. They're talking to the distributors. They're talking to the trucking unions. The government doesn't know jack. Right? These guys have boots on the ground. They're in the field. They're getting their hands dirty. And the Fed is going, well, based on our models. What do you mean models? These guys are out there doing it. Okay? So anyways, inflation will be more persistent. But if someone comes out and says hyperinflation in a discussion like the one we're having, you should know right away they're not qualified. Okay? Now, they have the right concerns. Inflation is high. Inflation seems to be, it will be here for a while. Some of it will stay forever. All of that is true, right? But if they start talking hyperinflation, they actually don't understand. Now, don't be mad at them. They're not trying to trick you. They don't understand what they're talking about. Okay? So, it's okay. So, hyperinflation comes from government intervention. Okay? Well, even stagflation is similar, Arbe. Okay? It's similar. The only way you can get that is government intervention. Okay? So, I'll pick on the UK, for example. I don't know if this is true, so don't get mad at me. The UK looks at a chart and sees nat gas prices. Price, quantity. Okay? And so obviously this would be downward sloping demand. And then we'll have this one here, supply. There's a shortage of supply, so price goes from quantity 1, okay, to quantity 2. So supply of natural gas in the UK falls. Okay, so now follow the equilibrium here. Oops, let's do this slightly different now. So you go from the original price to the new price, and prices rise. So the government then comes in and says, wow, look at the price of nat gas. We should make a rule that says you cannot charge more than price 3 because we're worried about gouging. So what will happen is you'll just have no nat gas. And those that have hoarded nat gas will get a bajillion dollars per quantity, per unit. And the economy will just die. And that's how you get stagflation. Super high prices and no supply. So think of places you get stagflation. Venezuela. Now you might say that's hyperinflation, but let's look at it from a different point of view. Okay? Okay, you have $100 and you want to buy a Coke. And you go to the store and they have one can. Now you buy it and now they have 0 cans. And now the price could be now the price can go to $1,000 if someone else finds a can of Coke and it shows up, right? So there's this, the hyperinflation is comes from the debasing of the currency and printing money to pay debt. But what about the other side of it where there just isn't any supply? And that would be it, because if natural gas in the UK used to cost $1 per unit, and now the cost is $4 per unit, okay? Because of all the other things going on in the world, and the government says that okay, that's crazy. This should be $1, so we'll put in a rule. Even if it's in here, the government says, well, you should never be able to charge more than $2 for nat gas, otherwise it's price gouging, so we're going to put a floor here. Well, what will happen is, dude, it costs $4 to bring it to market, and now you can only charge $2. So what happens is the nat gas goes away, and now some people really need that nat gas, but the problem is now price has gone to $7. But they're not allowed to charge that, and all of a sudden it gets really bad. So now you just simply can't get nat gas. Okay? So the economy gets stagnant, but if through a black market you can get your nat gas, but now it's inflated in price because it's a black market. Okay? And remember, all of this happened because the government wanted to protect you. Okay? Hyperinflation is sort of different but related. But the thing is, you need some sort of intervention. If you're allowing the free market to work itself out, okay? So again, let's do it this way. La 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 la. Okay, let me try to actually draw this nice. Okay. Okay. So we'll do price and quantity of whatever we're doing. Product demand, right? Product demand, or whatever we're going to measure. Okay. All right. So we have this quantity 1 and quantity 2. Price. Okay. At this price, that much will be demanded. Okay, so now we can play around with this stuff. Okay, if there's too much supply, okay, I think in my macroeconomics course, I think I give an example of fidget spinners. I can't remember. But remember fidget spinners? They came out and everybody wanted a fidget spinner. Okay, great. And then all of a sudden, nobody wanted these things. So supply went from Q1 to Q2. So if you owned the factory, what would you do in this situation if you had a warehouse full of millions of fidget spinners? What would you do? You've spent the money, you've made them, they're sitting in your warehouse. You have $1 million, right? You lower the price. Okay? And then what? You sell your inventory. And you stop making fidget spinners because you didn't do well on that trade. It's basically a trade, right? You traded cash for for resources, and then resources you created fidget spinners, okay? And then price returns. Now, a capitalist would say, well, I got this factory set up to make fidget spinners. What can I do to make them more attractive? So you innovate. Fidget spinners with LED lights. Okay? Okay? Prices went up. So when it comes to like hyperinflation, when it comes to a stagflation, often it's supply and demand related, and there's an intervention by the government that messes that supply and demand up. A true capitalist system allows for prices to go really high because it either entices producers to produce more or consumers to consume less. You have to have the supply and demand be able to move freely. Okay? The government comes in and says, our people are stupid, so we will think for them. And we will make decisions for our childish citizens. And they'll say, you can't charge more than this price, right? And they don't give the choice to consumers to pay more or switch. So one of the things, like when electric prices went up, one of the things that happened is people moved to nat gas because it was a cheaper, better, cleaner alternative. Well, maybe that shift now has pushed nat gas prices up and supplies down. Okay? But you should be able to have choice and substitutes and alternatives. That's what capitalism brings. So if you go to a grocery store in America, in particular in a rich neighborhood, and then you go to a grocery store in Cuba, who has more alternatives and who has more choices? Okay? You want to buy breakfast cereal. Oh my God, it's a whole aisle. You're kidding me. Oh, I need to go buy cat food. You're joking. It's another aisle. You have 30 choices of cat food. Like the cat doesn't care. Right? Oh, and I need to pick up some toilet paper. Oh my God. I got 14 choices of butt wipes. Okay? Wowzer. Go to a poor country where the government controls everything, they got nothing. Yeah, Arve's like, your 6 cat scare. Yeah, it's funny. They actually do, right? Like, you didn't buy Purina, did you? We don't like Purina. Yeah. Okay. Whatever. If your cat didn't eat for 9 days, like most like wild cats, then they'd eat it. They'd eat it, and they'll be grateful. Okay. Okay. Yona, why do you want to invest? Yona wants my track record. Why do you want to invest? Well, let's see. Let's see if I'm qualified. I've been doing live streams about Forex for 20 years. I have a macroeconomics degree from Harvard. I used to be a venture capitalist. Did over 100 deals. Before that, I worked on a board of directors with George Soros. But besides that, I have the worst track record in history. I am the worst trader you've ever seen. But if you want to stick around, my live streams are okay. Yeah. Oh, I forgot. And I was an A student. A minus, sorry. I was an A minus student at Harvard. Oh, but other than that, I'm the worst trader in the world. Okay. Oh, by the way, despite being the worst trader in the world, I bought Shiba coins. I bought 60,000 coins. What, 4 days ago? I'm up 30. Let's say 33% is probably about right. Yeah, baby, I'm up 33%. Making 10% a day. Fernando says, absolutely not. I'm way worse than you. No, probably not. Yeah, Shiba. Cool, man. My 60,000 coins are now worth 80,000 coins. Nice. I'm on my way to getting rich. You bought 11 million. Right on, Hope. Darko's. That's funny. Yeah, 11M, huh? Well, I invested my whole $2.50 budget to get those 60,000. But I thought I'd take my dollar. I made I probably made 88 cents. I think I'll take my 88 cents and double down. What do you think? Oh, is that right? Yona's a millionaire off of Ethereum. Sweet. Cool. Anyways, cool. Congratulations. My Porsche mechanic made something like $500,000 on Dogecoin the last time I talked to him. And I'm like, really? I probably gave you that much just in maintenance. Yeah, don't ask me for a track record. Yeah. All right. So, okay, before you could buy something like this, you would need a double bottom. Okay, cool. Okay, and it looks like probably 55,000 is probably the bottom, though, or at least the likely area to be interested in. Hope says, Wayne, have you heard about China going back to No, I don't know. I don't know anything. Then why are you here, Yona? You should go away. Or you should contribute positively to the community. Your choice. All right. So let's go. Let's take. I think I haven't done the end pairs yet. Let's start with Aussie. Look at that. Yep, that was terrible. Okay. So, right now that we have this, it's a much bigger concern. Yeah, see you, Johnny. No, it's all right, Maida. It's all right. Okay, cool. So, okay. The risk here is this is the monthly M3 for November, and that could set up a bigger move. So it's more like I was aggressive in here, and now I'm very conservative because this matters. So it's more like, I'll wait and see. Now, if I zoom back in, no. It's holding okay, but now I'm conservative, right? That's all. Now I'm conservative, and I have to make, right? Okay. All right. All right. Well, goodbye, Yona. Cool. All right. So Kiwi's going to be very similar. Pound here. Let's take a look. Okay. So with pound, you know, this concern now is this used to be 55 and now it's 54. So we got our low and we have our high and we're adjusting as the close. Okay. Okay. Low, high, and now we're looking at close. Okay. When I apply 2 weekly pivots, and bias, the latter one appears and the first one disappears. Yeah. Yeah, you have to, you might, what happens is you might have the same one on the same settings. So you just got to make sure, right, your pivots, one is set for daily or weekly and the other one is, weekly or monthly. And if that doesn't work, try 2 different pivot indicators. So like, for example, you might want to try like just standard pivots with a standard pivot indicator for monthly, and then biased pivots for weekly, or weekly and then daily, that kind of stuff. Okay, but it should work. But you're doing biased plus biased. Yeah, I don't know if I've actually done that. So like with this one, there's 3 different pivots here, right? Weekly, monthly, and daily. So it should work. Oh yeah, or redraw, right? Refresh your page by just switching the time frame. That might do it, right? Yeah, Morena, you're probably right there, right? Morena's like, Yona has probably had a bad experience, but doesn't have to bring like the heckling to the meeting. Just say, okay, and then give me an opportunity to, I think Yona's a woman, right? I can earn her loyalty or at least her respect. But like coming in and bad karma is not the way to do it either. So I'd just say, Anyway, so look, that would be a price action change, but now for CAD, I need more than that. Okay. So once again, technically it's set up this way, but fundamentally I do still want this to go up. So I have to retreat. Okay. So I'm going to spend probably the next couple of days just kind of trying to set up November. So the things I'm looking for, just so you guys have an eye on it as well, one of the things I'm looking at is the future 21. I'm eyeballing where this central pivot will set. So on this pair, it's currently at 90.5. But this is still fluid because it can come down more to, let's say, 91. That would push this down to 90. And then kick off here and come back up and go back to 90.5, maybe even 91. So this is dynamic right now, and so is this. And right now they're about the same. And so I'm trying to think probably 1, 2, 3, 4 days in advance, and then maybe we have an opportunity to start working our way back up this way. Okay, that's all, right? So that's all. So I got slapped on that red candle. I took losses on that red candle, and now I'm going to wait to see if the next trade sets up, and it probably won't be today. If if a trade developed today, it's probably either Aussie dollar or Aussie yen, because Aussie's been strong. But other than that, I'm really now stepping back. I'm looking at the forest, not the trees, and looking at, even in this case, a daily chart, not a 4-hour, not even a 1 hour, because like a 1 hour or a 15-minute chart or a 5-minute chart, those are tactical. That's tactical analysis. I'm trying to make an entry. Okay. And what I said yesterday is it's probably 50-50 or something, whether this moves up to challenge or not move up to challenge. And I said, I'll take the shot. And if it doesn't work out, then technically it's significant, and then I have to back myself up and set up the next trade on a higher time frame. And that's precisely what happened. I took the shot. One of the trades I was able to move the stop to reduce risk. I didn't get it to break even. And the other ones I took losses on. So now I have to like back out and wait for the next setup. Okay. And that might be a while. So I probably won't get a trade today, and probably not even tomorrow. I'll have to look at that if I'm going to set this up fundamentally. Now, remember, I'm trying to make a fundamental sort of portfolio, right? I'm trying to get this. If you're trading on smaller time frames, which is perfectly fine, right? That you might find yourself in this scenario for the next couple of days. So you could be short-term short, for example. And we know that is in here set up. And I'm wondering, like, for example, if this was only a wave or something, if a waver would say, oh, that's a 3-wave correction or something. It's all the same. Okay. The thing is, I still believe in Canada. I still believe the yen will weaken. And for now, these 2 days and this day and probably even the next day or two hasn't changed anything fundamentally for me, right? And so now I have to back out and wait. Now, things might change. If we find ourselves like way down here, whoa, then I might have made a mistake on the fundamentals, or something fundamentally has changed. Things like China's not doing as well as I thought, and then I might have to adjust. But for now, it's like, okay, down, probably up, and then probably a down. And then I'd like to see a double bottom, higher high, higher low, higher high, higher low, higher high, higher low. Okay, that's all. Okay. Cool. So I hope that was helpful. Okay. Hope that was helpful. I tell myself the losses are a normal part of trading. And now I have to adjust based on changing market conditions. And I will do so. If you're in my live trading group, I'll see you at 3 p.m. for the European front run. And then I'll see you again at 8 p.m. for the Asian front run. So thank you for being here every single day. I do my best to share as much as I possibly can, technically, fundamentally, psychologically, and I hope that is helpful. I know I don't put you into trades. But I hope you walk away with a little tidbit every day to help you make better informed decisions. That's the goal, for you to be able to see what needs to be thought about, and that you have a better process of thinking about that thing. So ultimately that you can make better decisions and you can develop your track record. And I do want you to succeed, so I do my best every day to give you valuable advice. So anyways, peace on earth. May the pips be with you. May your profits be above average. And I'll see you later. Have a wonderful day, everybody.